All righty. And it is a Wednesday, April 29th at 7:33 ET, Eastern Time in the AM. And this is Get Soft in the Morning. And I was just kind of going on a self rant. It's just interesting how much of a fucking cesspool the prop firm game has made. It has actually multiplied the cesspool of the investment game. So much so, it literally, and again, I get feeds on social media based on my interests, and my interests are investing, and so that's like what comes across, and just the amount of fucking people that come out and will come out on a, whether it's Trade C or it's Top Step X or whatever it is, they're all the same thing, whether it's Trade C or some other platform. For the most part, these prop firms all use the same kind of garbage. It's all Trading View kind of back end. If you choose, so you can choose your own front end. I choose to use the web interfaces only because they're just lighter and easier to use. And since I'm only usually trading one thing here at a time in any of these accounts, I don't really need a gazillion. I don't need this high-powered, operating system and platform with the bubbles and bookmap and but anyway, it has made such a fucking cesspool out of this business. It really is. It is just crazy, folks. I didn't even realize how bad it was. And last night I decided to do some scrolling on Instagram, and I haven't done much of that probably in over a month, just scrolling, and literally every out of 5 things that I seen, 4 had to do with prop firms or somebody starting their trading journey, and here's day 7 of me trying to become a day trader. And, and I look and I say to myself, what the fuck are you doing? What are you doing? This is day 7 of me, but I never see, here's day 7 of me in a real fucking job. Here's me in a real fucking job that's a real trade, or me as a programmer, or I'm a builder, or I'm an electrician or something. I just don't even see those. It's here, and it's all the same scene. And that's what's hilarious. It's all the same scene because it's somebody, whether male or female, doesn't matter. And you could tell they're in some city apartment somewhere. Usually, likely it's somewhere down south. Rarely it's anyone, usually it's Florida, South Carolina, Texas, even California. But you could tell they're in some city, like a fucking apartment, with some fucking view in the back, right? And there's always some fucking view. And it's some apartment that realistically somebody who is really a new day trader starting out ain't going to be in that fucking apartment, right? Your chances are, if you're really a new day trader, starting out, you're either going to be in your parents' fucking basement starting out, or you're going to be in some fucking rat hole in some shit box that you're not even going to want to share the view or anything. But anyway, it's all the same, and it's the same trading setup where they have 2 or 3 monitors. Everything on their desk is fucking pristine and clean. They got a brand new keyboard, and it's not just any keyboard. It's the $400 or $500 fucking LED, and then you look at their mouse, and it's the $600 gaming mouse, and then you start looking at other things beside, and you say to yourself, what? And they're sitting on a fucking $1,200 like John Madden or whatever the fuck it is chair, and you're like, what? I mean, I've been doing this fucking 30 plus years, and I'm using monitors that are like fucking 8 years old that are ready to burn out because I'm not going and dropping. Look, I would love to, I'm fucking cheap. The shit that I have works. The mouse that I have, I just actually bought a new mouse. It's like $35. And then I have like the one thing I splurged on is I didn't even splurge on it. My father-in-law got it for me for Christmas. Was the new Mac Magic Keyboard. And then everything else is a piece of fucking shit. And I'm like, I do fucking fine with all this stuff, and I've done fine forever. In fact, I've done more highly impacted trades on my fucking iPad or my phone than I have on my desktop. And anyway, just look around and like, and then they have the fucking Rode with the big fucking microphone. It's like, are you a fucking trader or are you just a fucking influencer? And what road you're going to. You're a fucking influencer. And that's exactly what you are. And you figured out that there's more in this game and there's more money in this game selling the game than it is doing the game. And it seems to be like epidemic form. So anyway, that was kind of my rant. And I didn't think it was that bad. Like I always knew it was bad, but last night gave me like a huge wake up call. I'm like, holy fuck. And it wasn't even just, it was a mixture. It was, the people with 400,000 and 500,000 followers, but it was also people with like 3,000 and 4,000 and 5,000. And I'm thinking to myself, what the fuck is going on here? Like, are these people are they fucking traders? Or are they just like fucking, are they just fucking influencers? And like, that's what it is now. It's like, you're an influencer. Don't be a trader, just be an influencer and, have some prop firm link or push some prop firm. Anyway, that's neither here nor there. So anyway, looking at the story pretty much of the evening was crude oil catching a bid. Trump making some kind of announcement last night about having his staff be ready for a prolonged blockade. And that kind of was enough for crude oil to kind of back jack over $100, and we've been kind of meandering around. And then I woke up this morning, I'm like, oh wow, we are over 100 again. Last night we did kind of pull back under 100, but I see we're back over 100 again today. But overall, I'm looking at the markets, and I'm not the only market that's really getting hit on $100 crude right now is gold. Because everything else is up. It's not up a lot, but everything else is up. And I just find that to be pretty interesting. And so looking at gold, as I keep continuing to say, last night actually had a couple of nice trades. Didn't make a lot. I think I made about $70, $60, $70 total. But shorting gold, did a micro. And that seems to be the trade, folks, that's working in gold. So I think if you were previously going in gold, buying dips, it was working. Look, and I was one of those people where it was working. It's not working anymore. And there is a true sell the rip mentality in gold. And just look back. Here's an hourly. Just look back over the last few weeks. And this has been happening long before crude oil's been spiking back up. And even before this move we've had today. So there is definitely something going on in the gold market. I don't know exactly what it is, but as far as investors and traders and speculators, they are selling rips. And that continues to be the case. Now, unfortunately, we don't really have much down here. As I even start drilling in, there's really not much down here that I would even gander at, even taking a stab. I mean, to me, if I'm going to do anything, a retrace back up to this 54.89s, 45. I'll be all right. Dyslexia. 45.89s are probably not a bad spot to try and sell a rip there. And then as well, back close to that whole number of 4,600, 45.94s. We've already taken out S1 overnight. We've already taken out, and since recovered, yesterday's lows. So I don't know if I would actually feel confident in taking that trade down there. And then going back to like a 1 hour here and kind of zooming out, there is not a lot of there. There's a couple of spots that you might want to consider. You know, you do have this area down here. You have some high volume nodes there, which could be, you know, possibly a spot to catch along. But as I had said, they have not been very kind. This area down here, which brings us, it looks like it's right below those lows there. The top of that is about 45.58. And we'll just mark that 45.58s. Couple of high volume nodes there. You can see that there's a decent amount of delta to the upside, where if buyers cannot hold that, a significant amount of sellers down there last go around, significantly red there. So do be aware of that. Again, I'm just pointing out what I see on the charts here. And then if you're looking for actual levels that we've touched, that does kind of coincide with this swing low down here that we had back in March. So, next level down is going to be somewhere around here, 45.10. 45.10. But as I mentioned, the buyers just have not, they've come in, don't get me wrong, they have definitely come in, but it hasn't been really a sustained rally when it has taken out these swing lows. So just be aware of that. And so that would be kind of my game plan in gold, is look for another rip up. As long as crude oil is over $100, I think you're going to still be selling the rips in gold. And so that's my kind of take on it. As I said, you go to the 5 minute and you do have a couple of levels here that you should keep an eye on today if you're looking to trade gold. Likely it's not really going to get a kick in the pants unless crude oil turns around and goes the other way. And so that's kind of the story there on gold. Let's flip over into the NASDAQ, which has now kind of getting, since we've rejected those highs yesterday, we're kind of in an area now where the NASDAQ's looking relatively tradable again. It's at least getting into a spot where it's like, yeah, all right, so we've rejected these highs. This was yesterday's high, so we didn't quite take out the previous all-time highs, and we haven't been able to do that. Obviously, we have the oil situation, but we have had this pullback and subsequent rally here. But this is a very tradable range, I think, right now, especially leading up to today's events. We got FOMC and ABC and Run MDC and all this other bullshit everybody's trying to hype up, and, all these hyperscalers, right? I mean, a year and a half ago, nobody even knew what the fuck a hyperscaler was, like, right? I mean, and now that's all you hear, like, literally 10 times on the fucking news. You know, hyperscalers. I was like, good God. They're fucking data centers, for God's sakes. They're fucking cloud providers. They're hyperscalers. You know, it's like, good God. I mean, what do we do, man, to ourselves in this fucking world? You know, why do we always have to make everything fucking complicated? It took fucking decades for people for it to sink in what people thought a cloud provider is, but now they're all called hyperscalers. I don't know, man. What a joke. We're dumb people, man. We are just a dumb race of humanoids. Anyway, so for whatever that's worth, you have all that crap going on today, and you know, again, I think the Nasdaq is looking very tradable in this range. You do have R1, these 2744s, which I think is a decent level to look at today for possibly a short if we get there. You know, we have not been able to take these out. A lot of it has to do with, again, the oil situation, but also with everyone kind of sitting on their hands with all this business going on this afternoon. And then not only do you have this afternoon's business going on, you have all these earnings of all these hyperscalers up at the end of the day today. And so that's got the NASDAQ in a bit of a holding pattern, so to speak. But nonetheless, good trading range here. You know, I do like this area down here. Again, all things remaining the same, 2709. 27009s. We have an alert in there from before. You also got an S1 up there, 27038. But as far as any other levels, you know, I think it's going to be I'm going to drill in a little bit. I'm going to be sitting on my hands probably most of the day. I, like everyone else, I'm going to look for like that opening trade and see if we get any kind of direction out of the gate and see if there's something worthwhile on the open. I'm not expecting it to be anything worthwhile, but again, I'm going to look for it. And then also on the shorter term, you do have a couple levels. Again, I'm not a fan of these because they're wicky. And when I do see these big wicks like this, I don't normally like put a lot of faith in it unless there's like multiple touches. So there you go with the NASDAQ. And then let's move over into the Russell. Russell, I think, is extremely tradable. Traded the Russell pretty good yesterday, in my opinion. I caught that downturn that we had and caught decent trade in there. Traded a few of the micros in the Russell. I have been avoiding the big contract in the Russell. Although I do prefer trading it, I've been doing micros. So as opposed to trading one Russell contract, I've been doing 3 to 5 of the M2Ks. And so kind of scaling down a little bit just because of price action. The price action has been kind of crappy, and so I'm trying to reduce risk and, kind of playing it that way. I do think, this area up here, these 2778s, if we go to the hourly, even this 2810 is definitely a great area to possibly take a short. That's at or near yesterday's highs. And you can see we have not been able to get through that level for quite a few days now, dating back all the way to the 22nd of last week. So that to me is I already have an alert there, and I would definitely mark that. And I think that is going to be a good short if we get up there. As far as longs, I wouldn't even look. Like yesterday, we caught this thing right down here. Actually worked out really well. Kind of didn't follow my own. I mentioned yesterday that this area, and it's this area again, we bounced really nicely off this area. I mean, literally coming down at the time to an S1 and bouncing the other way. Could have actually did a double banger where you're short, right? You get down to a point and then you do a reverse. You reverse and then it goes the other way. Could have actually did one of those, but I didn't. But again, it's the same kind of area as yesterday that you may want to look for a possible bounce. And then once we get through there, nothing really interesting until we get down near that whole number of 2,700. Top of the range there is 2,716. And that is kind of what's going on in the Russell today. Outside of that, really nothing. Again, it's pretty much holding pattern there. And then last but not least, I'm actually going to flash up soybeans. I have not pulled the trigger on any trades, but as you can see, I do think this is as well setting up for some nice trades going forward as the drought kind of continues to be an issue there. And then this is also a market where they actually been buying dips pretty consistently, even after this bit of a sell-off a few weeks ago. It has been buy the dip. I mean, again, it's not a massive buy the dip, but you put it in perspective, one contract and literally 5 to 10 ticks in this, and you can make $150 on a one contract of beans. And you can use, the thing that's nice about soybean is you can feasibly use, and I have used 3 and 5 tick stops. So you're risking $60, maybe $75 to make 150. And look, you might have to hang in there and sit in a trade for a little bit, but you can use pretty tight stops in this market if you're playing these levels. So another nice thing about soybeans there. But so as far as like looking for, I would like to see us retrace back into this area, which is yesterday's lows, which is about this 1182s for a possible setup to the long side. I'm not sure we get there, but that's pretty decent move down. But this market overall continues to trend up over the last several weeks or so. I also would point out that this area up here at this 1200 mark, I'm going to put an alert there because that is setting up for, since we had this fairly decent retrace since the last time we pushed up there, this was a pretty nice reversal pattern, even on an hourly here. So I'm going to mark this up here in the bottom of this range as 1199, almost near that whole number of 1200, as a good possible short. Okay, and that's kind of the story there on soybeans. So we'll continue to look at that market as a whole of what's going on. On another front, let's take a look at, let me just pull up, thought I had my tasty trade up, but I don't. We'll take a look at some of these earnings. I don't, I think all of them are actually in a pretty good spot to take trades. I just not sure that it's going to be, but we'll look at them anyway. I'm just not sure they're really going to be anything to shake a stick at. All right, now we can actually. All right, let's bring it there. And so this is what's going on. We have Amazon. So we'll look at Amazon first, since it's up on the list first. We'll look at Amazon. We'll look at Google. We'll look at Microsoft. We will look at Meta. Decent IV rank on Amazon. Don't have to worry about liquidity on here. If you are going to do something, you're likely going to do it in May. They're expecting a $20 move. That brings us down. So if we want to do a 1 standard deviation, they do have $2.50 wides, which are pretty cool. Which is pretty cool. I mean, I'm digging that. I would do it. I would do it 35. I would stay away from the $2.50 wides, only because if you look here, right, there's not really a lot of open interest there, so there generally won't be that much liquidity. These were probably added relatively new, so that's why there's not much there. I would stick to the 235. It's out of the range. We're still in that 1 standard deviation on the downside, right? So we got that 1 standard D. We're outside of the expected move as well. And then on the upside, that's going to bring us up to the 285. I would like to go a little, I would actually go outside. I would go from, well, look, the 285, 290 is going to give you a much better looking trade as far as like what kind of premium you're going to bring in. But it looks like it's going to hit your pop in doing so. Now, the problem I have with it is it's very close. Even though it's 1 standard deviation, it's very close to the top of that range. I would rather do the 295, 290, and even more so, I like the 300 strike better. And I like giving this one a little bit more room to the upside. And in doing so, now look, the 290s, if you look at the open interest here, it's absolutely insane. The 290s, the 285s, and the 280s, look at the size in here of open interest. I mean, and that just tells you, look, folks, like that's, you know, that should tell you right away, like this is not like something, these strategies are not just what retail people are. They're not just like out of the blue strategies. I mean, for there to be this level of open interest in here at that strike, there has to be some relevance to who's got those positions there. You know, that's a big level of open interest. And then you can see down here on the put side, no issues with liquidity whatsoever. And I actually feel a little more comfortable being a little tighter on the downside than on the upside, because these tend to, and Amazon specifically, if it's going to blow out, it's going to blow out to the upside. Even though it may get hit, chances are it won't. But again, who the hell knows? Who knows? I have no idea. But I like that trade better. And if I could do this one for 115, I like this trade for earnings. It's a little it's a little skewed to the upside, and that's because our put spread is a little tighter to the range. It's a little tighter to the expected move, and it's also inside of that 1 standard deviation, where on the call side, right, it's actually outside that 1 standard deviation. Right here's the 1 standard deviation right here, and we are fairly inside of it for the most part, but on the call side, we are clearly well outside of it. So anyway, I do like that trade, even though it's not particularly like great as far as like, you know, look, we always want to try and bring in as much as possible. I'm actually satisfied with bringing in $115 on this trade and having a 72% pop. Now, if you want to bring in a little bit more premium and you want to get a little more aggressive, then just drop these down. Then drop this to a 290. Do the 290, 295. You can see you can bring in 125 or even do the 285, 290 if you want to stay right at that one standard deviation, like pure, make it a true pure iron condor right at that one standard D. That you can do that as well, but you can see you're going to get paid for it a little better. You could probably do this for $1.45. You're going to reduce your pop, but you also flatten the delta. The delta is almost flat there. So, again, you can slice and dice this one a little bit however you feel things are going to go for Amazon, right? You think things are going to be a little negative, so maybe you pull the call spread down and then drop the put spread down. If you think it's going to be truly like a non-event and it just kind of sits in the range, then this is the perfect trade. If you think they're going to blow out and it's going to put pressure on the upside, then again, move this out. But either way, I kind of like a good variation of like keeping the put spread here at 35.30 and then moving this call spread based on what your expectations are. I would prefer to be out a little further, again, as more of a cushion. If they decide to, if it's like something they decide to blow out and do. Now, another trade you could look at if you are bullish and you just want to be bullish and you just another trade you're going to want to look at is you're going to want to do the May. And if you're bullish, you're going to want to sell and likely sell a put spread if you're bullish. And I would stick, if you're going to be bullish and you're going to go that route, I would stick around the 240 or 235, similar to the Iron Condor, but I wouldn't go any higher than the 240. Because then once you start going higher than the 240, you're getting into that area where, like, look, they gotta blow, not just blow out, but they gotta at least come in close to expectations. Because if it kind of sells off, you're going to be stuck, especially since it's May. But again, you can look at doing that trade. Like a 40. And then to make these worthwhile, folks, you kind of have to do a 10 wide. I mean, doing a $5 wide is fine, but you can see you're only going to bring in like $1 or 98 cents. And to me, that's just it's not really worth it. I think you need to do at least a $10 wide. It's going to increase your buying power and increase your risk a little more. But the other side to this is that it is in May. And you don't have to go away. And if worse comes to worse, I mean, and I don't highly recommend this. I kind of hate when this happens because, as I said, I mean, more times than others, these don't usually, when they go south, you maybe got 1 or 2 rolls in them to kind of recoup yourself. And then after that, you're kind of fucked. But they don't tell you that on Tasty Trade on the show. They'll just tell you to keep rolling it until your fucking face turns blue because they don't give a shit. They just want fucking generate commissions. But the reality is like the most amount of rolls you get out of this, if it goes south on any of these, folks, is 1 and maybe 2. And after the second one, look to get the fuck out. Because at that point, whatever you did back when you did this, especially when volatility was high, and if the volatility collapses and then you're rolling it, you're chasing a ghost that doesn't exist. Trust me, I know. I've been there too many times. I wish they would actually come out and fucking say that shit on there, but they don't. And it's kind of annoying. But anyway, needless to say, that would be where I would kind of land if I was looking to be like bullish on it. And that's all I got to say about Amazon. So the Iron Condor or even the put spread if you want to be bullish. Let's look at Google. Google probably more so than Amazon has the likelihood of blowing out probably more so than Amazon, and it's basically just what Google has in the pipelines up and above all the hyperscaler bullshit. Like, I know Amazon has the retail stuff, and that's more of a kind of a fixed, to me, that's more of like a fixed product that's kind of measured every quarter. Like, they kind of know the margins and all that stuff to do. It's AWS and the web services that are kind of a, let's face it, that's kind of the moving target when it comes to revenue. So, but with Google, they have so many other things kind of going on with the Gemini and all that kind of stuff with the AI as well. So anyway, I think Google is probably more apt to blow out, if they're going to, for this earnings cycle than Amazon does. And then with that being said, I would also stick and stay away from these $2 wides, these $2.50. Like, again, because like you don't have any. This one actually has a lot of open interest on the put side, which is very interesting. But I would stay away from them. I don't normally like them. You can see like at the whole numbers, the $5 wides, they just have better open interest and probably just normally better liquidity. But if I'm going in Google, I'm actually going inside, like looking at $23 move. I don't have a problem with Google going up to like a 330, 325. And skewing this a bit so I can actually go out a little further on the other side, like way past that one standard deviation, still being able to pull in $1.46 inside the expected move. But I'm really kind of hedging myself, and you can see here I already have some positions on in Google as well. I have some call spreads out in December, but you can see I'm kind of hedging myself a little, and this is actually skewed delta positive. I'm still in a good pop situation at 65%, but I'm well outside of the one standard D on the upside, and it's only, again, because I do think Google has a bigger propensity to blow out. And then guidance, right? And also give guidance that's probably a lot more bullish than Amazon. And again, I could be completely right tonight and might find out that it's completely the opposite. Amazon's the one. But, that's what's great about the markets is that, everybody's got an opinion. They all stink like shit and they all, and they all suck. But anyway, that is how I would play Google here. And do this trade, the 330, 325, and then go out and push this out and do the 395, 400. All right, and so that's what I would do in Google. And then again, if in Google too, if you want to get bullish and just buy calls, then hey, go for it. Do it. Do it. Do it. If I were going to do something in Google for like a day trade, this is to me where the weeklies come in. So if you're looking to do something just for earnings, and I think, again, this would be more of a Google thing as opposed to an Amazon. You could do the same thing on Amazon if you want. I just think Google has a bigger probability of blowing out earnings. Don't just go into, like, say, if you really want to get bullish on Google, don't just go out into these ridiculously out of the money options or like go and buy a 400 option for $44. Look, you could do that. And look, not to say I haven't ever done. I've done it before too. Where I've just gone and bought a 400 option. It expires in 2 days. It's fucking $44. I'm like, yeah, sure, $44. Who cares? if they blow out and the thing goes over 400, right, I'm going to make some money. You're not going to make as much as you may think, because not only do you have to have this go up over 400, you're going to need to get out of it before this volatility collapses the next day. So that's something I know a lot of folks don't even look at. They're like, yeah, and then, lo and behold, let's say, the next day, it didn't make it to $400. It's at $395. And then they go and look and they're like, yeah, I'm going to make bank on my options. And then they go in and then they're like worth like, maybe they doubled. So maybe at $44, and they're like, what happened? Well, what happened is that when you bought that 400, you bought it when volatility was at, 60 here, and implied was 80. And then the minute the fucking market opened, that volatility is going to get just sucked and drained out of that market faster than you could get a bid on this thing to get out of it. And so, and I've seen it. And then I see people, they sit there perplexed, like, what happened? The guy the guy on the internet said, yeah, well, the fucking guy on the internet, yeah, all right, although it just only doubled, he's just putting up that, yeah, he made 100% on it. And he probably bought one like you did, or he bought two, and all he did was he just fucking gambled, and he was just looking for an Instagram moment. He wasn't looking for a successful trade. He was just looking for something he could post on Instagram and say, yeah, we made 100% on this trade and we recommended it. That's all they're doing. They don't fucking give a shit about the volatility and it getting collapsed and all this other shit. And then you don't even know what he's really quoting. Do you even know that he fucking bought it? Number one, do you even know if he even got out of it at whatever price he said, right? You don't know any of that. All you know is that he has some thing splashed on his fucking Discord. We made 100% on that one. And you have no idea, no context. So anyway, just be aware. Not to say I wouldn't do this. It's actually not a bad, to me, this isn't a bad thing to do. I would wait on this until the very end of the day if that's what you're looking to do. Buy it literally within 15 minutes of the market closing today. So at 3:45 or whatever it is, Mountain, Eastern, Pacific, whatever time, 45, quarter of, look at this and try and buy this literally like 5 minutes before the market closes. It actually may even go up depending on what the market does. It may go down. But, to me, that's not a bad shot. And it expires next day. So you're going to have to, no matter what, you're either going to have to get out of it the next day, because if it goes up to 400 and it's over 400, you're going to have to get out of it anyway, because you don't want to get assigned 100 shares of Google. But to me, for $44, that's not a bad deal. That's not a bad deal. And they do blow out, and it does go up $50, $50, $60. You can make bank. And you can make a case for all of these all the way down. Obviously the ones that are closer to the expected move are more likely to get hit, like the 370s, but you're going to pay for it. You're going to pay for it, for sure. So again, nothing wrong with that. Same thing's going to hold true with Amazon. But going into these, just go into them with the fact that these are throwaways, man. And if you're truly that confident that they're going to have a good earnings cycle and it's going to be positive for the stock, don't mess around with the ones that are out of the money. Buy ones that are in the money then. Buy ones that are in the money. All right, number one. And number two, don't buy the weekly. Don't buy the weekly. Just buy the May. Buy the Mays. Give yourself a little bit more time, because if they're in the money and they have and they blow out earnings and it's up $25, you're going to make a hell of a lot more money, and it's actually going to have true intrinsic value because there's time left. You have 16 days left. Than the one that's going to expire the next day, even though it'll be cheaper. It's cheaper for a reason. Just buy the May, but buy a spread. Do like a do like a 60. I always say if you want to go in the money, it's got to be better than 60 deltas. That's just my number. Everybody has a different number. Some people like the 70s, some people like the 80s. I like the 60s. I think it's a good risk reward spot where, you're buying some intrinsic value, but then you're also, risking a little more that it must go up for it to hold its value. But, that's kind of the purpose of this trade, is that you're looking to take advantage of a moment. And so, the 340 or the 345, I'd like the 340. I would do the 340, 345. It's going to cost you 295, but you're controlling about 6 deltas. You got a 50%, you got a better than a 50% pop. And if their earnings come out and it even goes up $5 or $6, at least you'll have some chance to make some money, because it'll still be in the money. So anyway, there's some trades on Google. Take them for whatever they're worth. Next, Microsoft, although the IV rank in Microsoft is really extremely high, this has been an absolute, Microsoft's been a piece of junk. It really has. Although, saying that, I do think, and I do like, a 10 wide iron condor in Microsoft, because I think out of all of these ones that are going to announce earnings, I think they probably have the potential to stay or remain mostly in line. And with that being said, with Microsoft, I would be willing to do a $10 wide at the one standard deviation, which you can see I'm doing. And that's what this one looks like. And again, it's more so that I think that they're more apt to come in line and not really have so much of a great reaction to their earnings, and I don't think they're necessarily going to have a bad reaction. I think it's going to be, my call is that this earnings cycle isn't as bad as everyone thinks. It stocks up maybe $5, $6, maybe $8 the most. And I think it kind of just goes off and rides into the sunset. And then I think more importantly, this IV or this volatility in Microsoft just gets collapsed real hard. And this comes in and you're able to buy this back by Friday for like $1 or even less. So anyway, that's kind of my take on Microsoft, and this is the trade that I am looking to do. So it's the 390, 380, 470, 480, $10 wide, little more risk, right? I'm risking about $700, but I'm bringing in almost $3. Basically delta neutral and good probability of profit. All right, so that's really it in Microsoft. And any other combination of this is fine. Look, you want to do a $5 wide, do a $5 wide. You want to reduce the risk, that's fine. But I do think Microsoft's going to be the one in this whole lot that is within line. I don't think it's really going to have a blowout. And then let's go over to Meta. I'm a bit indifferent on Meta. I don't really know. I mean, I would stick to the May. I don't really know what to expect, quite candidly, from Meta. It's a mixed bag. It's always a mixed bag with them because they always kind of play. They always play a little bit of games here and there with, whether it's, chargebacks and all this other shit, and they're expanding in an area and they're contracting. I mean, it's always kind of a weird revolving door with them. I don't usually play them on earnings because of that, and because of it's always just this weird fucking, it's always obscure with their guidance and all this other stuff. So anyway, with that being said, I think if you're going to trade Meta, just stick to the one standard D. I think Meta is going to be another one that I don't think it's going to be a blowout, but I don't think it's going to be a big, huge disappointment. I'm not going to trade it because I just don't, again, I don't really like trading them for earnings. And then going down, I think that is kind of it for those and the biggies. And then we'll talk about Apple tomorrow. I'm not going to touch Ford. I mean, what do you do? It's $12 fucking dollars. Ford's been $12 fucking dollars forever. Just like when it was $6, it was $6 forever, and now it just happens to be 12 and 12 forever, probably because of inflation. I mean, I don't know. I'm not going to touch Chipotle. This is another garbage. To me, it's a garbage stock in a really bad industry. I mean, the food business right now, folks, is horrible. Like, I don't even see a need to trade or invest in the food business right now. It's got to be one of the most contracting businesses right now in the country, and it's because people are changing their lifestyles. They're not going out and eating burrito bowls and all this other shit. They're finding that it's a hell of a lot cheaper to me to go to the fucking grocery. Not to say people aren't. I'm not saying nobody's, everybody, but majority of people. I mean, and I see it. I used to drive by Chipotle and there'd be lines out the fucking door, and this is just a couple of years ago. And now you drive by Chipotle even at lunchtime and you're lucky if there's 2 fucking people in there. And you know what? People are finding that it's a hell of a lot cheaper to go to the grocery store and go buy the 4 or 5 different ingredients and make your own fucking burrito. And then also, this shit's not selling. What's selling is people, and not people, but in general, people are buying fucking coffee now. Like, that's like a thing now. I don't get it, but that's like a big thing. These sugary, disgusting fucking coffee drinks from 5, 6 different companies, and then there was a slattering of a couple little small shops that are trying to fucking survive doing it. I don't think small shops are going to be able to do it. Honestly, I think they're up against some behemoths that just can't get the volume. But anyway, that's kind of the thing. So anyway, that's all I got. Market looks like it's doing absolutely fucking nothing. We are a little red now. And that is all I got. So look, we got some earnings trades. Got some big earnings trades going on. We got all these events going on this afternoon and tonight with earnings. And so trade them tight. And I will be back to